Welcome to the DeFi Standard, and this is Mickey B. Fresh.
And Patty XRP.
And today we're going to do a little update on the Flare Finance Songbird Network regarding some of the risks to Flare loans and the new addition of XFi as collateral to the Flare loans. So Patty has created a really nice diagram that will make it easy to understand for everyone. So I'm going to do a quick deep dive here into the current status of Songbird Finance.
All right. So with that, I want to address because there's definitely been concerns I've seen within the community and definitely some valid ones out there, as well as some updates that are coming next week that should help some of the concerns that are going on for sure. We'll have to see how it plays out. They still need to be like incentivized correctly and all that stuff for these updates or changes to kind of help out. So we'll see how it goes, and it's definitely something we have to monitor over time. So just a couple things on the design of Flare loans. It's a fork of something called Liquity protocol, which is on Ethereum and uses Ether as essentially the collateral asset for the platform. So with that, we'll kind of look at that after we go through all this and see what it looks like today, with a lot of stress being put on the market and obviously the huge sell-off we're going through right now. And it's kind of continually, a continual sell-off since November. So it's been a long time coming on this. So to address some of these things, remember with Flare loans, this system is always going to value Canary dollars as if it's equal to $1, regardless of what it's trading on the open market. So what it's trading on the open market kind of has to do with how the peg is performing and things like that. However, the system's always going to, value it at $1. And the reason for that is because they need a base point for people to mint new Canary dollars and also do redemptions to help with the peg. So the other thing to remember is Canary dollars, it's highly important that it's operating well for the entire, ecosystem to perform. Having a stable coin that works well is vital to any DeFi ecosystem. So let's just touch on this again. The Nest owners are the people that are essentially allowing Canary dollars to be minted. They put up collateral in either SGB or now XFi has been added, and they receive Canary dollars in return. Now, what they do with that Canary dollars is up to them. They may put it in a liquidity pool where other people can access it, or they may put it in the stability pool where they can earn collateral at a discount by allowing their Canary dollars to be paid back on liquidated loans. So if you stake Canary dollars in the stability pool, you should expect over time that your Canary dollars will be used to pay back bad debt on liquidated loans, and you'll be earning essentially collateral assets in return for that, depending on the stability pool you're in, whether that's for SGB or XFi. Additionally, we have another part that's called redemptions. Redemptions are meant to help the peg come back up to $1 when it falls below $1 in value on the open market. So, let's say Canary dollars is trading at 95 cents, which to me is really hard to figure out right now because there's not another stable coin for us to kind of compare its price against right now. However, that's something that's going to be coming, and we'll touch on that. But essentially, if a user sees that maybe Canary dollars is trading at 95 cents on a decentralized exchange or somewhere else, well, they don't necessarily want to trade their Canary dollars that's selling, trading at a discount to the $1 peg for another asset. They'd rather just come to the redemptions and trade for that asset as if Canary dollars was $1. So what happens here is the lowest collateralized loan, when redemptions, are available and make sense to do, a user will pay Canary dollars back to the system, which reduces the supply to hopefully push up the price of Canary dollars on the open market back to its peg. And in return, they get collateral as if that Canary dollars was worth $1. So the Canary dollars they return pays off the lowest collateralized Nest loan first, and they get some of their collateral in return. Additionally, we were talking about stability pool pays back the bad debt. So one of the issues that we've kind of been seeing, and we'll go to WSGB collateral here, is we can see only 1.6% of the Canary dollar supply is currently in the stability pool for the SGB loans. If we look at the XFi loans, there's about 3% of the total Canary Dollar supply in that stability pool. So this is really low. When we were in XFi V2, you could see that essentially there was normally over 50% of Canary Dollars in the stability pool being used to protect the loans. We don't have that now. So what's happening is as this market keeps going down with either SGB or XFi, if there's not enough Canary Dollars in the stability pool to pay back these loans that get liquidated, then this means that when a nest is liquidated, their collateral at 110% it gets a portion to all the other nest owners based on their share of equity in the platform, or essentially debt in the platform. And so they get their collateral, but they also get the debt assigned to them. So it's basically rebalancing where the debt belongs to ensure that it has appropriate backing. So another thing with this right now, there used to be 700 nests for SGB before we kind of had the switch into XFi Gamma, and we saw like a lot of redemptions happening. So a lot of people started closing out their loans, myself included. And this number has just kept dropping. And then, of course, we've had extreme market volatility. So the SGB price has, been falling tremendously as well. And we can also look on XFi. Currently, there's 17 nests there as well. However, their collateralization is much better. So this is providing, a little help to the loan system and the backing of Canary Dollars right now, because the total collateralization of the XFi loans is holding pretty well right now, as opposed to SGB. The collateral backing is really low, and we're in the recovery mode essentially right now. So one thing to remember is that these loans, the collateral from them is backing Canary Dollars, and the amount of nests out there is getting diminished greatly, and also the price of SGB keeps falling along with the market. How far down the market's going to go is anybody's guess. I can't tell you an exact number. All I know is that when the market's falling, this stuff gets more risky, obviously, with volatility. So take that into account with whatever you're doing on the platform right now. Additionally, one of the other things that we kind of have seen is that there's a lack of arbitrage. So arbitrage is basically a risk-free trade, and it's when somebody sees that they can, let's say SGB is worth 10 cents on the DEX and you have Canary Dollars, but SGB on Bitrue is worth 15 cents. So, if you have Canary Dollars, you can buy SGB at a cheaper price than if you had it on Bitrue. So what you would do is you buy that SGB on the DEX and then you go and sell it on Bitrue. What that does is push the DEX price up with the buy order for SGB, and then it pushes the Bitrue price down when you sell that SGB for USDT. However, once it gets sold into USDT, there's no way to loop back in the system and keep doing that until the prices converge on each other somewhere in between 10 and 15 cents. So one of the things that hopefully should help with this, and it needs to be incentivized properly so there's enough volume being used with this, is CoinTiger Exchange is going to list Canary Dollars against USDT. So this will allow people, when they take SGB, out of essentially Songbird Finance, they can sell it into USDT on CoinTiger. Then they can take that USDT and buy more canned and come back to the DEX, buy SGB again at the cheaper price, and then go and sell it on CoinTiger until those, prices essentially meet in equilibrium from it getting bought up on the DEX and then also being sold on the centralized exchange. So that's something that should help. We'll have to see how well it does, obviously, and it will be coming next week from what I can tell on messages from the team. Additionally, there's going to be a listing for SFIN to USDT on CoinTiger as well. So that'll have a centralized exchange price aside from just currently the DEX, where that's the only place you can trade it right now. So we'll have to see if that helps out. It's definitely something I'll be watching. And this is either, this is one option we had, was to get Canary Dollars listed on an exchange. The other is once Flare Wrap gets up, it'll let you basically bridge USDT from Ethereum into Songbird Finance so that you could swap into canned on a DEX. And that will also kind of open up more arbitrage as well. Flare Wrap's a little harder for them to launch. So at least they've gotten this in there. So we'll have to see how it works. Additionally, touching on another thing, so FTSO rewards. When DFLR was coming out as the rewards for using the stability pool or providing liquidity with X5V2, I was more involved in the platform, and I had loans at any given time or providing liquidity. There are some instances where my FTSO rewards did not come every time. I'd have to go and reach out to the team to see what's going on and get those. So, the whole thing with FTSO rewards for SGB that's in the platform, it's kind of, I guess I'd say it's iffy on if you're going to get them all the time. So from what I could see was people that had WSGB staked in Flare Farm possibly weren't getting them yet today. And we know they've been trying to stand that up and it's still not ready. So that's another thing you need to take into account if you have SGB, that it's possible you don't get the FTSO rewards right now because that whole system isn't working flawlessly at the time. Yeah, so Mickey, do you have anything like questions about any of that or to add?
Yeah, so a couple things here. So with CAND and to USDT pair and the SFIN to USDT, I think that's a healthy progression forward. Getting some of these things on a centralized exchange. They don't need to be listed on every centralized exchange, but just having that ability to arbitrage is a healthy step to get the platform going forward. Some other questions is, so everyone's probably thinking, well, is this design really the best? And what is this based off? So this is based off a successful design in the Liquity protocol. So how long has that been running, and has that been successful, and how does it manage these risks that come with the protocol at the time? And also, everyone should keep in mind, this is experimental finance. They say it in a big red banner at the top that this has been experimental finance. They're moving very slow how they add everything because this is a Canary network. So at the moment, I'm just have test money in there. And full transparency, I'm just testing, providing some liquidity and some liquidity pools, staking the LP tokens. I don't have any nests out at the moment, and I haven't in a while. So I'm doing it as a test to see how you can earn Songbird, to earn SFIN, and get used to the platform. I look at it as like a DeFi playground. But what is this based off of, Patty, this whole Flare loans?
Yeah, so Flare Loans is built based off what we were saying, Liquity protocol. So if we want to look at, what's going on with Liquity protocol today, because obviously be facing the same kind of stuff as Flare Loans. So currently, you can see here they have over 1,000 what they call troves rather than nests. So that's the collateralized debt position are currently open. The LUSD supply is 538 million. And then you can see 62% of the LUSD supply is staked in stability pool. So this is way, way higher than what we currently have on Flare loans. And this really helps keep the system healthy for everybody, whether it's the people taking out loans or the people using the stable coin in like a DEX or something like that. LUSD has gotten to the point where it's a top 20 decentralized application as far as total value locked in it. So, I mean, it's worked pretty well. The peg isn't the best peg in the world, but it's also better than a lot of other stable coins. So we can look at this right here for their peg. Obviously, they started out really choppy for, I guess, like 4 months. And since then, there was one dip to 97 cents on the peg, and then it's been much tighter since then. But now we're seeing volatility, and they're having a little more depegging. So this is kind of what LUSD looks like to this point. Additionally, looking on down further here, the total collateral ratio is at 183%, which is healthy. It's not in recovery mode. So it's looking a lot better. It's also been out there a lot longer than Flare loans, and it's using something like Ether, which isn't a brand new asset that's been trading for a long time and also has a lot more liquidity than Songbird does at this point. So, this is what we would hope to see in a situation like this, but also because of some of the things that we've mentioned in this video, that's not what it looks like right now. Does that mean, I'll see people want to say like, Flare Finance is a scam or whatever because it's not working perfectly. I don't think it's not a scam. It's that, the fact that we didn't have Flare Wrap or it's taking a long time to get it out there. The arbitrage has been having, the lack of arbitrage rather is having a negative effect on, how many people can take out nests. The market's getting hammered. So the collateral just keeps falling in price, which is not great. So it's kind of just, coming into a whole situation where things are pretty risky right now.
Yeah, I'm going to say people need to be careful with that word
Yeah.
scam, because you confuse the new people coming in. Because if you're whatever biased, don't call things scams that are legitimately out there trying to build something. There are actual real scams, and those things you need to point out scams. But we don't use this word scam just broadly on everything. And I think it does a disservice to the community. So if you're out there tweeting, calling things scams, and you do no research, you're doing a disservice to the community. Just know that you're not helping anybody. And we're part of a community, should be here to help everyone. Take the time to understand and learn and understand how these things work. Those people that just go scam out there, block them. I would just remove them from your following list, because it doesn't do anything. It doesn't help anyone. And we here, and Patty and I here to try to educate and bring knowledge to everyone so you understand how these things work. Those people that just call things scam, they're not doing anything to help the community, and they're not saving anybody. So there are true scams, and those are the things that we need to make sure that are called scams. But this is a protocol in experimental finance. It's doing exactly what experimental finance is doing. It's not ready for mainstream adoption and a lot of value. But will it be when it's on Flare? Hopefully. But we'll see if we get there.
Yeah, and I mean, this is mainly this is just to kind of show what is going on right now. Obviously things are very risky when the market gets volatile and dropping like this, especially when you're trying to stand up a whole DeFi ecosystem. So it's making it a lot harder to do. And based on whether you think things are healthy or unhealthy, or whatever you feel like the ROI you can get from SFIN, that's all going to go into your decision on what you want to do. This is just what it looks like. We got to see what happens here over the next couple of weeks with the new additions. If those, help out in any way, or, what happens with the market and stuff like that. Right now, my risk appetite has been hit for a few weeks. So, I haven't been in loans or anything like that. I've mainly just been delegating and using my own wallet to delegate, because I've had issues getting the FTSO rewards at sometimes, as well. So, yeah, I don't really have much more to add on this other than we got to keep an eye on it, and everybody's got to make their own decisions on if you're putting a lot of money in here, if you want to keep it in, or, whatever. We can't give any financial advice or any stuff like that. Mainly just here to kind of talk about what's going on and help people understand how things work, essentially.
Yes, I agree. I think we need to look at this platform as a DeFi playground. You're only putting test money in there. There's going to be a full suite of protocols built out in the future. That's really when you put money on there, when you see the platform working fully, and there's a lot of value, and you can kind of see the risks and what they are. We know that it's very risky at the moment. So if you see something like that, be wary of putting a lot of money into this. And also, we have a very volatile market at the moment. So that affects the protocol, right? When SGB is going very low in value, XFi, the whole market's taking a thing. It puts stress on these protocols in general. They're not going to work completely perfect. All of this DeFi is experimental. Now, this is very experimental here, but it takes time to be built. And you can see the longer it takes when they get built, they're more robust. And the protocols will have long lives in the future, years from now. But you have to have that foundation. And I also want to stress that we have to separate what Flare team is doing with building the FTSO, the state connector, and the F asset system with what Flare Finance is doing. That's an application built on top of Songbird, and it'll be built on top of Flare Network. So those are separate things. Even though the names are similar, they're separate entities. And none of this is financial advice. We're just here to educate and share the knowledge that we have researched.
Yeah. And I mean, one of the things I think that'll go into obviously, if you go into a DeFi ecosystem or protocol that's been around for a while, so you could have witnessed times of stress and times when things are going well, and see how the protocols operate. That's going to be something that's much less risky to enter into when what can happen, and if it's achieved a level of adoption that makes it rather robust. However, when you wait, you don't get the possible ROIs that you can get when you go in early. So like, looking at doing something like this, we're early and we're getting more rewarded for doing so as far as your share of earning SFIN or something like that. Now, once it gets more robust in the future, then those yields aren't going to be as high when there's more money in it and your share of everything going on is less. However, you don't have as much risk when we're at that point because what can happen and everything. So that's just something when you're entering into this kind of stuff to always keep in mind. What is my risk to reward ratio? Is that in line with, what I want to do and what I'm comfortable with and all that kind of good stuff. So, yeah.
I think that's going to wrap it up.
Absolutely. So I'm Patty XRP.
And I'm Mickey B. Fresh.
And we're out. See y'all.